Welcome everyone. Welcome to today's episode of Budget Ki Baat. I have with me, of course, Mr. Swarup Mohanty from Mirai Assets. He needs no introduction, of course, and so I'll take the opportunity to get to the right to the meat of the matter. Well, I think the biggest question on everybody's mind right now is the correction in the markets that has been going on for the past few weeks or let's say months. People have seen those lofty dreams of 26,000, 28,000 have been slashed back to 23, 24,000 odd levels on the Nifty. So, from here on, let me begin by asking, sir, what is the current outlook on the markets from your perspective?
I think, first of all, thank you so much for having me. An absolute pleasure to be here at this time when there's a lot to discuss and there are different views. Some can be in agreement, some can be in conflict, but that's what makes things so good now. Yeah, the markets have corrected almost 14% from the top, and there were various reasons for that. I think if you look at the last 2 3 years, the 2 3 years completely and post-COVID actually, it's been run on a lot of spending from the government, which we call government capex. There has been a slurge in consumption, especially urban consumption, one way practically. And when you see the slowdown of both of them, and to back it up with corporate earnings not up to the mark, the market will react. And especially if you see the commentary over the last 2 3 years, the commentary across was yes, the market was expensive. We've had the regulator calling it froth, the central bank calling it expensive. So, in that situation, when the market is what we call in an overbought situation, things can change pretty quickly. Though I think from an equity perspective, 14% from the top is not what you would call real correction. Is just, probably some parts of the market being sold and probably a rejig of the broad market. But see, people have to understand a certain thing about the Indian stock market post-COVID in what we call democratization of the market. In my younger days, when I started my career, this market was supported by two or three Indian institutions. Then came the FIs, and together both started running the market. But lately, we've had this third side, which is the DII, which in the form of Indian retail investors formed a far broader market of buyers and sellers than it used to. The market cap of the market has gone up substantially. What used to be the smallest large cap in 2019 is the smallest mid cap now. What used to be the smallest mid cap in 2019 is the smallest small cap now. And add to that, the number of public issuances that have come mostly in the mid and small. The point I'm making is the choice of buying stocks for fund managers like us is far wider in the last 5 years than it was just before COVID. Complete transformation of the market. Add to the other fact that we have very strong two entities, the SEBI as a regulator and RBI as the central bank, running this show very well. So together, the investor today is on a far different platform than what he or she was just before COVID from a market perspective. So such corrections do well because any fund manager will tell you that, his or her aspiration is to buy a good company at a good price. Some good companies or great companies were not available at a good price last year. We are seeing some of the markets becoming reasonable now. It's still not cheap, but some good companies are beginning to be available at some good prices now.
Absolutely, absolutely. That's a very optimistic statement. I'd say not optimistic, but a very positive statement in such times. I would say to hear.
Vishu, if you are an investor, you have to be an optimist. If you don't think tomorrow is good or better, and there is data points to suggest that, then you shouldn't be investing at all.
Absolutely. Okay. Talking about the current context, Union Budget is just around the corner, and everybody looks up to these events. And how do you think would this impact our current situation?
Yeah, I think normally I have always believed that a budget is kind of a review and a rebalance of your entire financial process of the country. But this time around, from a personal perspective, I think this budget does stare at some very important positivities or possibilities in the future. One, they have to give a clear direction of the government capex, which was holding up the market. And that's something which people will look up to. The best part of this budget is because the food inflation will be more or less intact because of good monsoons last year. This budget will not be under that much of a pressure to tackle inflation. Inflation more or less will be okay next year. Yes, there will be some pressure on the rupee volatility, which we've been spending some money to hold it. That's something which people will look out for. And sustained policy continuation on the reforms that they were continuing. So that would be my takeaway from the budget. Though a lot is always discussed on personal tax. I'm a law follower, so I'll not comment on that part. But from the broad pillars of this economy falling into place, and a large pillar was government apex, and of course continuation of reforms. One has an expectation to watch out for what they will do on that part. That's my opinion.
Absolutely. Uh, Getting a little sector specific, do you see any particular sectors that may be particularly benefiting or maybe on the back step because of this
See,
upcoming
Vishu,
budget?
I have a very simple and wish for the country. I mean, and the country, I think, moved from being broadly a service backed or service sector backed economy to manufacturing, and that I think really would step up the position of broad basing the country in the future by putting manufacturing in the forefront. It had far bigger implications on a country like us than just earning profits for the economy. It does solve the purpose of providing employment. And if you take China as an example, it's a fantastic example of how manufacturing has sorted a lot of issues for the country at a time when we're studying 8% unemployment. This is a good step to take. Now you take one step back. For manufacturing to take place, we have the best form of demography right now in India. But add to the fact that 35% of this demography is malnutrition. The two biggest spendings that I have been wishing for from all budgets is extra spending on healthcare and education. You have to make each person in the country capable enough for skill, and people with education adapt to skill, and people with good health provide to be good laborers. So I will expect these to be filled in. If that be so, my favorite theme remains healthcare. I think it's a perpetual theme in India. I see that continuing, and of course the core themes, the boring themes as I call them. A lot of hope for seeing banking coming back because some of the banks were available at good prices. We're seeing some movement there already, but hopefully there should be something for them. I see a big, I mean, consumption remains. I think though the country is now changing from a low and mid level consumer to a mid and high level consumer. So consumption brings back the flavor. And if consumption does not happen in India, there are serious issues, right? So those core pillars of the economy, healthcare, infrastructure, banking, and consumption is something which I look up to in the coming days.
Absolutely. In the recent past few months, or let's say in the last few years, public sector units have also become a favorite of the retail investors. So, what's your take on the public sector going forward?
Like I said, that will depend on the capital outlay in the budget. If it does not happen, then you could see a change of hands from those to the core sectors. I see 2025 as an extremely boring year for the boring stocks to come back or the core stocks to come back or play a vital part in the economy. Excitement probably will not be there in the market, which we saw in the last 2-3 years.
Absolutely. Budget season is always marked by an increased sense of volatility, especially the budget day. We have seen large movements in the market itself. Any thoughts on how should a retail investors look at this volatility?
See, every investor should understand that in volatility always lies the opportunity. If the markets are not volatile, then there will be no opportunity at all. If it is one way, then you are buying an expensive underlying every day. There has to be movement both ways. One thing one has to understand is in the stock market, when somebody feels the stock is bad, and wants to sell, somebody necessarily finds it good that day for the trade to happen, right? It's a contra every day. And that's
Right.
the beauty of the market. While somebody might feel this is bad, that person on that day will find that same position to be good. And that's how volatility impacts both sides. And if you look at the last 2, 3 years, I mean, the market has been going one way. What volatility also teaches us is what is the bottom of the market. It throws open the market bare. Always good to know where this should land. If you get to know that, then you know where you are. And trust me, in a growing economy, the landing always is higher than the last landing. Irrespective of the economy or the volatility, this country is in one direction. I ask everybody this simple question at the end of all my presentations. What are you looking at? Sensex at 76,000 odd or India at 7.6 trillion?
Right.
It's how you look at will define your behavior. And it's all about behavior. Today morning, I tweeted out, falling markets are good for SIPs. If you don't understand that, then I have to work harder on my investor education. This is when you start accumulating good stocks, good funds at good prices, which was not so last year. If you were buying last year, there is no reason why you shouldn't be buying now because prices are in your favor and they will probably continue to be in your favor this year.
Right. Absolutely. Do you foresee any risks around such events? Let me not just say budget, but events like budget that retail investors should be aware of.
I think the markets have become very transparent nowadays, and markets are smarter than all of us. They factor in a lot of risk before it happens. I think by the build up to it, a lot will be factored into the market. Gone are those days when on a budget day a lot used to happen, unless something disastrous comes out of it. And those days of those disasters coming out are also gone, right? So I don't see much of that happening. There are other issues which are plaguing the market, which are returns of or earning expectations coming back. Like I keep on saying, what kind of capex outlay, both from the private and the government, will also impact. There is a lot happening on the geopolitical side. US is just beginning to make its play, which will impact the rest of the world. They're just announcing some, so those will impact it far more than the budget. We'll have to watch out for a Chinese stimulus, which is around the corner, and they will not keep quiet too. So some large countries are at play, and hence, due to that volatility of that global factor, we will see some opportunities on the commodity side, right? And never do we have a sustained gold buying process, and because of that, the sovereign will continue to buy gold. So it's a very different year from what used to happen till 2024 December 31st is a fact.
Absolutely. Before we conclude, if you have to leave our viewers with one final concluding piece of advice, what would it be?
So I think there is a risk to investing. There is a risk to not investing. 2025 is the year of risk of not investing being higher. I'll tell you why. In my entire 30 years of being in this market, I have never seen investors being in such an advantageous position as 2025. Let me start with equity. Equity is looking reasonable from what it was last year, right? Because the cycles might change. It is advisable to be with a fund manager in 2025. Otherwise, I am indifferent to whether one buys directly or buys through a fund manager. One has to back oneself, and what is right for the investor, right? But in 2025, since cycles might change, it is better to come to a fund manager, is my opinion. But equities are far more reasonable than what they were last year, right? So accumulation of equities this year is the prudent thing to do for investors. Because of US and that unknown becoming known, we are talking about interest rate cuts becoming a reality. Brings back very decent positions on debt on a 1 year or 2 year horizon. If you see the last 1 year, and I was checking some data, the last 1 year liquid fund average mutual fund performance as per value research is 7% or 7.1. Debt has seen a brilliant run in the last 1 year. It will continue. So debt also looks fairly good from a allocation perspective. Because of the fragility of the globe, there will be sustained buying on gold. I do not know about prices, but it is a great time to accumulate gold also. Basic financial advising in the past had told us that gold and equity are inversely, related. But never have I seen equity, debt, and gold looking good from allocation perspective. When you look at portfolio returns, what a multi-asset fund data has shown us that the probability of sustained median return is better if you allocate across asset classes than one asset class, right? And the 10-year outcome of gold versus Sensex shows us that, there's a lot beyond equity also. So my submission is for 2025, the person who accumulates assets across these 12 months or an asset allocator will win. A market timer will definitely lose. So accumulate this 2025. The more you accumulate in this, what we call the J curve of the market, the better your wealth creation is when the markets reverse. It's a very simple saying. If you take care of the market in its bad days, it will take care of you in its good days. So please check for bad days of the market. They're actually good for you.
That was brilliantly put. I love that statement. This was our time for today, but I do hope you'll allow us to learn more from your experiences again and again.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.